Hello, fellow traders. 'Tis I, the Rumpled One. Tuesday, January the 8th, the year 2019. Let's talk trading. More price action. I was looking at some of the emails and YouTube videos that, hit my inbox on a regular recurring basis. Oh, let's see. We had the slope angle indicator talking about using moving averages properly. And then we had somebody else talking about reading candlesticks and momentum. Then we had somebody else talking about using oscillators. And I just kind of smiled to myself because when I look at the chart, all I see are wicks and horizontal lines. And it's like they take something that's so simple and they just make it more complicated. I mean, and then they throw things on there like support and resistance, supply, demand, and all these other conceptual things. And I just have to smile. One of the things, though, that they usually do talk about and that I can agree with is money and risk management. If you don't do that properly, you can wind up blowing your account. So something so simple as the yearly open, as you can see here, the euro yen kind of got near it, but now it went down. And so if we take a rule of thumb, if price is below that yearly open, kind of gave me an idea. I could maybe modify the candle color indicator and stick a yearly out there, but I'll have to think about that. But anyway, we've got the price action here below the open. So if you would have just taken any short signal here, for the most part, there was some profit to be made. Sometimes a little, sometimes a lot, but there was profit to be made nonetheless. Just on trading, using the yearly open, giving us a bias to trade. I'm looking for price to go through it and then maybe really take off to the upside. And on the weeklies, we still have two pairs that have not filled. So look for that. On the weekly, lower wick zone, it was huge. But you see, even though it was huge, price moved out of it. And we're 68 pips off that weekly high. And using, once again, the opening range, here we have the first day of the month opening range and the first day of the week opening range. You can see here, price didn't quite make it too far out of that opening range. Let's see, we had a high of 85 with a trigger at 79. So you should have been able to take about 3 to 5 pips out of that trade. And that's basically just a small trade or a scratch trade. And you can see here how, once again, knowing that we're below the yearly open, and we're actually also below the monthly open, which is one and the same because this is January, looking for those shorts paid off. So there's that yearly. On the weekly open, and we are still above it. And so you can see here, close open for the year, the distances, high to close, close to low, high to open, open to low. These are the opportunities, how many pips you could have made just trading that open. Basically, buy zone opportunities are these two columns. These two columns can be considered anything from rat zone or holo opportunities right here, reversals. In fact, one of the things about price action, they were talking about looking at price action and then trading the reversals. They were saying that you see here we've got a big candle, a smaller candle going down, and into these zones, if you see a big candle coming into a what they called a key level, then you look for a reversal. I'm sorry, you don't look for a reversal. You look for small candles. It's like decreasing size. They call it momentum. Once again, a concept. Whereas I just look at the wicks. I mean, okay, you've got that lower wick zone. Price went in and out. It came back through it. You take the trade. Here again, price went into that lower wick zone, but then it broke through the other side. So once again, just using these wick zones for entries, for exits, and for directional bias usually pay off. And once on this, the first trading day of the month, okay, the open price lines, you can see we are below them all still. That's over the past 12 months, just the rolling 12 months. So next month, this will be 2019-02. I think the first trading day is the 1st of next month. And here we've got the high and lows, and you can see here we're only above one of the lows and we're below everything else for the last 12 months. And on the daily, the inside bars. Okay, we've got some opportunities here. Let's see. The Aussie CAD, there was a breakout of that low, would have paid off. The Euro GBP, just a tiny break to the upside, might break again. Pound Canadian, already had that break, probably on that Canadian news today. But once again, you can see there was opportunity. The pound Swissy, you can see it's already broken below. New Zealand CAD, opportunity. And New Zealand franc, Swiss franc, opportunity. So once again, you can see these nice inside bar trades. Now, if we look here at the dollar yen, you see here we were 2 bars ago, we had an inside bar, and today it popped out, but it's come back in. So when it's gray here on the updated dashboard, you can see that opportunity. And looking here at the new beast, you see it popped out, but we've got that inside bar. So once again, looking for these trades. Now, some people might say the inside bar is only good on the next day, or don't, but I don't know if I want to buy that, because then, you know, like when you're trading on the hourly, they have like maybe you look for the inside bar, break on the next one, but then who knows, that inside bar, the candle that caused the inside bar is now considered a master candle. So like right here, you've got this master candle, which itself is an inside bar, which would make this one a master candle. So you see here we've got a master candle because this is an inside bar. And then we've got another inside bar compared to this candle. Okay, but this candle's inside bar compared to that one. And you got a couple of breaks. So 1, 2, 3, 4 is usually what they determine a master candle. But it just depends on how you want to look at it. And so you trade what you see, not what somebody else sees. And here we go on the ranges. You can see only 3 over 100. I guess they're taking a day off. Just looking at previous days, open, high, and low. And the holos, you can see we had the weekly highest open, was right here. Then we had the daily highest open, which was right here. And so you can see here, that's the H1 highest open. And you can see there was a couple opportunities to go short here. Now we've got the daily lowest open, just happening in a Larry live trade. So you might look for a reversal, 7 pips off of the low. And here's the weekly H1 lowest open, and the monthly D1 lowest open, and the monthly D1 highest open, the yearly highest open, and the yearly lowest open on the H1s. And an oldie but goodie, we're looking at the buy zone. You can see here, we hit the pivot once, we hit the pivot twice, we hit the pivot 3, 4, 5, 6 times from above. Oh, I'm sorry, that's the future pivot. Here's the pivot down here, or floating pivot, future pivot, whatever you want to call it. We took out the pivot here, right there in the Japanese session, and we took it out again because we here in the New York session. So that pivot got covered. Rat zone opportunity coming up here. I think I mentioned that. Nice range 73. So we can look to trade the rat zone. We took out that pivot as we saw before. Got a weekly pivot down here. And we have a monthly pivot up here. We'll see which one gets hit first. As far as the daily, see we missed that pivot yesterday. So we've got 2 missed pivots here. 23.31 and 21. I don't see this pivot getting taken out anytime soon. This one is iffy, but then this one's 500 pips away from last year, so we'll just see what happens. Trade the price action. More price action. So you can see here we've got a big bar. This one here isn't so big, so they would say momentum slowing down. We say 2 ball at the bottom, look to go green at the line, which would probably be a 24.30 long trigger. You can see the amount of buying compared to the amount of selling here. And so you can see the buyers are starting to push back. So another trade would be, you see this lower wick zone right here. That's the top of that lower wick zone. You look across here, yeah, it's cutting through some other wicks. And if you want, you can even, let's see, bring that chart in, and you can see, okay, we had a 1 ball there. So if it breaks this, this level here, it'll look to go long. But this is usually, we just trade these horizontal lines, but you can fine tune it once again using the wicks. So possibly when this candle closes, price will drop down and you can trade out at a lower wick of this 1 ball candle or 2 ball candle. Wick zones in and out. What can I say? We see it every day. I don't know if you trade it every day. One of my favorite horizontal line charts, but we've seen this level before and you know what to do. Just use the candle color. Tick chart, once again, we showed buying right here, price crossing above the valley of the ask. Once again, it did it again, and it's moving upward. Einstein line. There was a small trigger. That's probably maybe a scratch trade there. You see it broke, came back down in a candle body. Maybe you just get out, because as you can see, if you want to look at the price action, these green candle bodies are getting smaller. So the range of the candle is getting smaller. So you exit and see here, the range of the candle got bigger. So bigger at that line. According to their price action, that means that price should penetrate, and it did. So that's just another way to read the price action. You look for the candles to get lower towards this lower level, and if they do, then look for a reversal. If they don't, look for continuation. So that's it, fellow traders. Focus on price action, because remember, it's not what you trade, it's how you trade it. So drain the bank.